Hey guys, it's Adam Rose, Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. This is another episode of the Mortgage Guy podcast, and this week we're going to talk about some market updates and what's going on with Fannie Mae. That will be brief, and we're also going to do a few borrower things that we're seeing a lot more of in the market, some do's, some don'ts, things you need to be aware of when doing your pre-approval. So first off, Fannie Mae, all right, so good news, and it's going to, what their goals are here is to try to get more owner-occupied buyers into these multifamily homes. So they changed their guidelines, right? So Fannie Mae, it's conventional financing. You know, you can do 3% down, 5% down to 50% down. It doesn't really matter. But one of the changes that they have is usually on multifamily properties, the down payment requirement changes, right? 15% down to 25% down on multifamily. Well, they're trying to get more owner-occupieds into those multifamilies instead of people buying investment properties. So they're trying to make those multifamily homes more attractive to someone that wants to live there, right? Someone that will deal with having a shared party wall and a neighbor on the other side. So they've changed owner-occupied down payments on multifamily from 15% down to 5% down. That is huge. That is huge. So if we have a first-time home buyer who has started saving money and wants to go conventional, they no longer have to save that massive down payment. I mean, if you're buying a $100,000 house, that's a $10,000 swing in out-of-pocket expense. So now you can make your offer more attractive, cover your own closing costs. You can use the other $10,000 for renovations, repairs if you need to. So that's fantastic news. That will be going into effect on November 18th. I don't know if there's going to be any hits on interest rates or pricing because of that style. I would assume there's going to be a little bit, but it should be pretty close to a single-family owner-occupied purchase as usual. So at least I would hope so. So that's a fantastic change. That's going to be going into effect again in about a month, November 18th, and I think we're going to see a lot more buyers jumping in. The younger home buyer market, and when you're doing this with this lower down payment and you have rent on the other side, it might be enough to help cover the majority of your mortgage payment. So I think that's going to help out the housing market a lot, and it's going to open it up and hopefully fix some of the housing shortage that we have for owner occupieds anyways. All right, quick note on what we're seeing here, guys. So okay, income. All right, I don't know what's going on out there with some of the younger generation, but last time I checked, manufacturing is usually a 40-hour work week job. So are most of the jobs out there. We are seeing so many year-to-date shorts on hours, no pay, no penalties. We're seeing a ton of it, okay? So when we're talking to you guys and getting pre-approved about your income before you've sent us pay stubs, and we ask you how many hours a week you work, you always, typically are like 40. 48. Oh, I work so much overtime. And we're getting these pay stubs, and it's showing year to date that you are making half of what you're supposed to be making for whatever reason. Either you're off work an extended period of time, or you're simply just not getting the hours that you explained to us that you're getting. That's important, guys. That has an impact on your approval. So make sure when those questions are being asked by your lender, you're being upfront, you're being honest, truthful, right? So please be aware of that, because we're going to go through those pay stubs, check your year to date, and if it's off, it can have an impact. Next thing we're seeing a lot of bank statements. All right. So almost every buyer in the market right this instant, even people that own currently that are selling their house, moving on to the next, almost every single one have housing shock. So what's housing shock? So housing shock's basically stating that your new house payment is significantly higher than what you're currently paying for rent or your current house payment. All right, we're not going to go into the doubling, the tripling, and all that fun stuff and how that's looked at, but everybody has payment shock for the most part, unless you're finding some amazing deal out there, some unicorn, which is very rare, right? So with housing shock, we have to have some compensating factors. Okay, so let me just give you an example. If you're paying $500 in rent and your new house payment's $1,000 a month, and you bring me bank statements, and you've got $5 in the bank, what do you think the question is going to be? The question from underwriting is going to be, how are they going to go up $500 a month in house payment and actually be able to make their mortgage payment, right? Makes sense. Seems like a common sense question. And so we want our buyers to make sure that when we're asking these questions, you have a good grasp and understanding. I know shopping for a house can be exciting. and the last thing you're thinking of is honestly affordability. Some people, that's the forefront, but a lot of times is it the size? Is it the location? Do I love the look of the house? Do I love the feel of the house? And then you don't care what the cost is. You just want to buy it. But I need you to take that into consideration, guys. So savings is key. We've talked about that on past podcasts. But just because you can go no money down on a house doesn't mean you shouldn't have some money saved in the bank. Okay, have a house payment in there, 2 house payments left over, whatever. But start saving. We are seeing way too many scenarios where someone decides that on Friday night they want to get pre-approved for a home loan because the new house hit the market they have to see on Saturday in order to get an offer in by Saturday at noon. That does not work very well, okay? And we're getting some surprises. Everybody in the industry is getting surprised and running into these same challenges. So I want to make sure our market is well-informed and ready to go and ready to pull the trigger. So that is something we're going to be going through. Negative balances, overdrafts, all bad, guys. All right, so let's get it together. We have to curb in the spending. Everything's getting more expensive. We got to cut back. And we got to make sure we are prepared to buy that next house. We're not just ready, shoot, aim. All right, we got to be ready. That's all I got on these updates, guys. And Fannie Mae, I think it's huge. Super excited about that. Quick plug, though, BNI, so Business Networking International. We do have some openings here in Sydney. If you are interested in getting a plug for your business or doing some local advertising at a very, very cheap cost, and looking for referrals that help your business, make sure you give me a call at 937-497-9662. I will give you some details on where we meet, when we meet, and all that fun stuff, who's in the group, openings. But we would love to have you come out and visit and check us out and show how BNI can really help grow your business here locally in Shelby County. That's it for me this week, guys. Again, check us out on YouTube, all right? We're also on Spotify and Apple Podcasts, and we will see you guys next week.